Retail sales came out today, and people will shop. They will go to restaurants. They will buy goods. They will go to the mall. They'll buy cars, and they will complain about inflation at the same time. Okay, we're going to go over those retail sales numbers today in this market alert. We'll go over our portfolio, sort of the market sentiment, what we're doing with several stocks, and our reaction to all that. We also had some pretty nice moves in our portfolio today, guys. So thank you for joining me on this market alert. Please hit like, subscribe. Hopefully you learned something from these videos, and we have some fun in the meantime. Let's get to it. So as usual, let's start with the day's action. We'll start with the Dow Jones today, moving about 0.1%, nothing too crazy there. S&P up about a little bit over 0.25%. Forward PE on the S&P 20.43 times earnings, okay? And that's the forward earnings of the S&P 500. Kind of hot and elevated, guys, okay? So keep an eye on that. NASDAQ up almost 1% on the day. Nice move. But the Russell 2K takes the cake, over 1% on the day. VIX moving down 3.6%. Nice move, under 20. Again, guys, VIX under 20, not too enticing to be purchasing stocks at this level, okay? And as far as the bonds go, yield curve still inverted. We are at 3.78 on the 10-year, kind of reaching that critical level, guys. I'm pretty worried about the 10-year bond yield. Remember, as this number moves higher, it is more likely that our tech stocks, high beta names, get hit more disproportionately than other value stocks, sort of like your financials and your your tech names, of course. Okay, so as of the last video, 365. So that's about maybe a week ago. So significant move to the upside there on the 10-year. Okay, now energy 79.10 under 80, moved slightly higher than before our last video. 85 on Brent versus 83, and natural gas still continues its decline. 2.46 versus 2.60 as of our last alert. Okay, now natural gas, I've talked about this before, pretty enticing here to start considering buying some names like a Linde, like a Cheniere, like a Coterra Energy, also a Devon Energy, which we'll talk a little bit about a little bit later about Devon Energy. So as far as natural gas goes, pretty enticing to start to look at some of these stocks there. Okay, strength of the US dollar, 103.63 versus 103.32 as of our last video. Pretty steady there. Okay, we don't want to see it over 105. That would probably add another kind of indicator for us to worry about, and maybe even force us to trim some names, some specific names in our portfolio. Okay, now we're focusing on earnings, still going on, consumer price index, and retail sales numbers. Okay, these guys came in pretty strong. We're considering the Federal Reserve when we're looking at these guys, because the Federal Reserve is looking at CPI and retail sales. You bet they are, and they would respond accordingly. Okay, we also have DraftKings reporting tomorrow for a portfolio after the close. Okay, when it comes to our portfolio moves today, we're up 3% on our portfolio, $3,201. Excellent move considering these numbers here. So we're definitely outperforming the markets, and we're up 26% year to date. Our top movers for today, SmartRent, surprising. SmartRent up 10.45%. Excellent. Palantir up 9.65%. It was up over 10% at some point. And DraftKings up 7%. If you notice here, DraftKings running up on earnings. I don't like any stock running up on earnings, but I feel like DraftKings is going to report some really strong numbers from NFL playoffs and Super Bowl. So we're hoping that they report good ARPU, that's annual revenue per user, and lower customer acquisition costs. That's always been the problem with DraftKings. And then the bottom movers of our portfolio, Marvell Technology down only 1%. That's pretty good. AMD down almost 1% as well. That's all semiconductors. And then PayPal up 0.84%. These are top bottom movers of the day. Okay, let's move on. Now, a couple of things to talk about here today. Ford, we'll start with the Ford Motor Company, and we dodged that bullet, guys. I mean, man, let me tell you. So news came out yesterday. This is yesterday's news, but F-150 Lightning production halt was triggered by vehicle battery fire. Kind of scary, right? I have my F-150 Lightning sitting out there in the garage. Man, not good to hear. I had to call Ford customer service and ask them whether this was affecting the ones that are already delivered, and the answer was no, it's not affecting that. I think it says somewhere down here that they're not affecting, the current and sort of vehicles that are sitting on the lot. So, whew, thank God. Okay, now we had sold our Ford position and we had moved into Uber. So far, nice move. Not that I predicted the future, but it's just a move that worked. Better lucky than good, I say. Okay, now we got Topgolf Callaway also reported earnings. I haven't done anything on that because it's very confusing and complex. Usually it's a very simple sort of earnings number or earnings report. It's proving with the acquisition of Topgolf to be a lot harder to understand, and it's making up in the most of that business. So I want to spend some time before I do my breakdown on Topgolf Callaway to make sure I really understand what's going on with those numbers, because there's a lot of adjusted numbers as far as Topgolf acquisition, not share buybacks, but stock-based compensation, and all things of that sort, and same venue sales, things that we all have to understand before we really talk about it. Corsair will be our next earnings video. That's a stock that's a lot easier to understand. Very happy with Corsair. The move there has been really nice on the stock. Go check it out, okay? And if you haven't checked it out, please go check it out. Don't wait for me, okay? Now, again, tomorrow after close, DraftKings, okay? And we're expecting those customer acquisition costs. That's really what I'm looking at to be hopefully a little bit lower than normal, okay? I don't expect them to be so much lower, but hopefully a little lower than normal, and some positive notes on Arizona, Florida, hopefully some good news on California being the next state to accept online gambling or mobile gambling. And then Uber, we almost reached our second point on the buy level on the stock. Let me show you guys this. So here's a 1 month chart of Uber. And of course, we bought at 36. That's our current cost basis right now. And essentially, I don't care that I bought sort of at that head fake high right there, because it's just such a great business plan on the edge of profitability, and it's just going to explode more and more and more with their advertising costs. If you want me to go through the whole spiel, look at my last video on Uber on our earnings breakdown and why we're so excited. We're excited about the stock, okay? So our first buy point, $36 a share. Next buy point is going to be under 33, which is right about right here, that support level at 33. We believe the stock has some support there, but here, just recently, we saw the stock fall almost to 33, but we did not pull the trigger, okay? We have to wait until under this sort of level here to pull the trigger at 33. After that, we're going to be going to $30 a share, somewhere around here for the next buy, and hopefully under 27 for the next support level, or maybe somewhere under 28 will be nice, this support level here, okay? And we went over that on the Uber video, okay? It's just giving you the chart so you guys understand sort of my train of thought there. And then moving on to Palantir, okay? Palantir, we're going to hold. This is a hold for the long term, okay? We're sort of exhausted in our buys on Palantir at the moment, since it's already the largest position in our portfolio, okay? So we're going to maybe just chill out a little bit on buying Palantir, let the stock do its thing. Maybe if it falls under maybe $8.30 a share, that's when we would be buyers again of Palantir, but we have no need to add to this position. Our position is pretty well built out. Maybe in our 401k portfolio, but no hurry to add Palantir after this massive run, okay? And we're very interested in Devon Energy, okay? And I'm trying to think which stock I would sell to claim some Devon Energy. I'm thinking maybe some Callaway, maybe this kind of swap in our portfolio would make sense, but I haven't made my mind up yet, okay? But this is a stock that we're very interested. It's a stock that's very resilient, okay? They just reported earnings. They had some kind of snafus with production cuts and some sort of production issues also, and shareholders don't like that. So the stock saw a hit there, but this is paying almost a 9%, actually a little bit over a 9% annual dividend. So amazing stock for dividend play. Great balance sheet, great management. So I think that any movement there is going to be, or any movement to the downside is going to be temporary for sure. We like the chart. Go take a look at the chart. So very interested there, but we first have to really understand what's going on here. But that's my train of thought around Devon Energy. Now, moving on, and we'll talk a little bit about retail sales first, which retail sales came in hot, guys. 3% versus 1.9 expected as far as retail sales, excluding auto. That's what, when you see the word X, that means excluding auto, 2.3%, still higher than the expectation, even if you exclude auto on that January sales number. Hot, guys. That's a hot read. And every time you get a hot read, like in the CPI, right, which was hot here on the year over year and on the core, slightly on the core, you bring this guy to slam us with higher rates, higher quantitative easing. We don't want that. That's what brings risks to the market. Okay, now what are we doing in the market at the moment? And we understand that sentiment in the market is just better and better. And that's reflected by the way that our portfolio is performing, how high beta names have been performing recently. Sentiment is good and improving. And this comes, I believe, from the markets thinking that the most damage that the Federal Reserve can do, or the rate hikes, is essentially behind us. And maybe not the damage, because the damage is a lagging indicator. So the train of thought is most rate hikes are done. We're already essentially slowing down on rate hikes, and we can see maybe 1, 2, maybe 3 25 basis point hikes, and then we just hold for a while. So we're looking at maybe a Fed funds rate of 5.25. That's what I'm thinking, 5.25 or 5.5. And we get there, and then we just halt, because the lagging sort of effect of this is maybe 3 to 6 months, I would think, of these rate hikes. We're still maybe feeling the effects of the 75s somewhere in there. But as time goes by, the economy can get weaker and weaker from those rate hikes and feel a bigger effect. So far, the effect has not been felt. That's that no landing scenario that we've been talking about before, right? No landing, meaning the economy doesn't even weaken because of the strength in jobs, the strength of the consumer, which we just saw. So that no landing scenario still very much in play for the markets. Of course, the little bit of a drawback from that scenario is the soft landing scenario, in which the economy does slow, but not significantly enough to cause damage to the stock market. Okay, now we're being more and more selective as markets move higher, and we think you should be as well. Okay, when everybody starts to pile in the stocks, especially high beta stocks, which are scarier at the moment, and I'll tell you why. But as more people pile into the stock market, you should be more and more selective, or even move into a seller type of mentality, or a trimmer type of mentality, in which you're trimming back positions instead of adding to them with everybody else. We believe our discipline says we are buyers of stocks when everybody else is panicking, right? We look for that panic when the market pukes stocks and the Dow Jones sees these massive declines like we saw in 2022. That's when we start getting interested, right? As valuation comes down, we get more and more enticed to buy. As valuations get higher with the share price of a stock, we get more and more weary of what's going on and move more towards the seller side, okay? Now, like I said, higher beta names. Now, let me explain this to you, higher beta name. When you hear the term higher beta, it means a stock that moves a lot more violently than the S&P, the Dow, or the NASDAQ, okay? And let me bring you to this example. I'll bring you the example of Facebook, okay, of Meta Platforms, formerly known as Facebook, okay? And right now we're at $177 a share on Facebook, selling at 20 times earnings. That's current earnings, and forward earnings of 1828, sitting at 177. But if you see a chart, or a 1-year chart of Meta, you see here that in October it was sitting at $90 a share. I think it went to like $88 a share, but it was sitting at $90 a share. We're looking at almost a 100% rate of return from October till today. Almost, maybe 80-90% rate of return. Okay, so that means that you were buying this stock in October at a forward P of like 12 or 13. That number's obviously changed. The stock has become more expensive on a forward basis. So the question would be, are you going to pile into this move, or are you going to wait to get a better entry point given the risks of the market and the positive sentiment on the market? That's a decision you have to make for yourself. I would love to get into Meta, and I think Meta, even at 18 times earnings, is fairly inexpensive. But the question is, Are you getting it at the best price possible? And even if you buy it here, I think you're good for the long term. But of course, you want stocks at a bargain and not piling into a stock after everybody else did. Okay, I hope that makes sense for everybody there, all right? And now we're talking about potential future risks, right? So after everybody piles into these kind of high beta stocks, you have to consider future risks like the debt ceiling fight that's coming up in the next couple months. We're looking at Russia. Who knows what can happen there? And tensions with China. How many balloons are they going to send over? And how many $300,000 Sidewinder missiles are we going to throw at these balloons, right? So that's a potential risk for the market. And that's the reason that we're not piling on to the massive move that these markets have had recently. So our market discipline now, okay, not yesterday, today, says hold your horses. That's where we're at right now. We're at hold your horses territory. We're being more selective as markets go higher. And then the positions were mostly set during June or October of 2022. When everybody was panicking in June to October, that's when we were at a heavy buy in the market. Of course, that panic is no longer there. That's evidenced by the VIX. That means we are more on a hold basis than buyers any day of the week, and even hold towards sell. And that's evidenced by our sell of NXP Semi, which we sold maybe a week ago to put some money into other positions like Palantir, which ran up tremendously higher after earnings. Okay, and we were pretty confident that was going to happen. Now, buying tech and high beta names, we went over that, but you may be late to the party. We just talked about that, and we evidenced Meta. We can also talk about another stock. Let me see here. Let's do NVIDIA, NVDA. If we look at NVIDIA Corporation, this one here at 61 times earnings, and let's look at the forward PE of 49.51. That's a big ask in a high rate environment, high volatility environment, right? If we're looking at this chart, look at this, October 112. You could have gotten this for 112. Now you're buying it at 227. Same with Tesla. That's another high beta name. You could have bought it at this time 105, and now you're buying it at like 217, whatever that was. Let's take a look at Tesla here real quick. And my kind of leaning on this is, where were you when it was at 113? Why were you so scared, and why are you so not scared today? And look at this, run up 2.38 today, 2% upside today at 214. So why do you like Tesla more at 214 than 113 here, or whatever it was down in the 100s? What's the difference? What changed? And that's what you have to realize when you're in the stock market. So that's it for today's, guys. Hopefully you guys learned something from this video. We had some fun. Let me know if you guys have any questions. Follow me on Twitter, Instagram. Let me know how I can help you in your investing career, journey, whatever you want to call it. Peace out.